Welcome to Impact. Headlines: Biden and Xi Jinping to meet for a second time. IMF upgrades China's growth. Oil prices ease. On Wednesday, US President Joe Biden will meet Chinese President Xi Jinping in person for the first time in a year at the Asia-Pacific Economic Cooperation Summit in San Francisco. According to the BBC, the meeting will discuss the Israel-Hamas war, Taiwan, war in Ukraine, and election interference. Moreover, the US wants to re-establish military-to-military ties with China. Impact on Sri Lanka. While there isn't a direct impact, easing of tensions between the world's two largest countries is welcomed. A less volatile geopolitical environment helps to keep global commodity prices in check and also smoothens trade flows. Sri Lanka intends to export itself out of the current balance of payment crisis, and an accommodating global environment helps. The International Monetary Fund upgraded its GDP growth forecast for China. It now expects the world's second largest economy to grow by 5.4% this year, up from its previous forecast of 5%. However, the agency warns of slower growth next year, projecting that China's GDP will expand by 4.6% in 2024 due to weakness in the property sector and subdued export demand. Impact on Sri Lanka. While China is not one of Sri Lanka's main export markets, it is a significant investor in Sri Lanka. A growing economy will help its development state agencies invest overseas, from which Sri Lanka will benefit. Moreover, Sri Lanka hopes to attract over 150,000 Chinese tourists. Due to pandemic restrictions, Chinese visitors fell to less than 5,000. However, such travelers have increased this year. Oil prices declined from recent highs. Reuters is reporting that renewed concerns over waning demand in the United States and China, coupled with mixed signals from the US Federal Reserve, has dented market sentiment. A comment was made by Federal Reserve Chair Jerome Powell that it could raise interest rates again if progress on curbing inflation stalls dampened prices. Impact on Sri Lanka. Sri Lanka's full dependency on oil imports means changing prices significantly affects its balance of payments. While the country's foreign exchange reserves have improved in recent months, they are still dangerously low at just over 2 months of imports. And that's a wrap for this week. Subscribe to our YouTube channel to stay updated on the latest developments in Sri Lanka.